Welcome back to another market update. If you've been trying to figure out where the housing market is heading as we wrap up the year, you are definitely not alone.
Oh, absolutely. It feels like we are on a bit of a roller coaster right now. One week we're up, the next we're down. What are the numbers telling us this week?
Well, we just got the latest data from the Mortgage Bankers Association for the week ending December 12th, and the headline is a dip.
A dip? How big are we talking?
Mortgage applications decreased 3.8% from the week before, so definitely a step back in overall demand.
Interesting. You know, when I hear decrease in December, my first thought is usually just the holidays. People are busy buying gifts, not houses.
That is a huge factor. In fact, on an unadjusted basis, the index dropped even more, about 5% compared to the previous week.
Right, so the raw numbers show people are taking a breather. But usually there is a tug of war between people buying homes and people refinancing their current ones. Was everything down?
Mostly yes. The refinance index specifically decreased 4% from the previous week. So even homeowners were a little hesitant to pull the trigger last week.
Whoa, a 4% drop week over week? That sounds negative, but I feel like there is a but coming. Huge but here. If you zoom out and look at where we were exactly 1 year ago, the refinance index is actually 86% higher. Whoa, 86% higher than last year? That is massive context.
It really is. It tells us that even with a slow week, the environment for refinancing is vastly better than it was a year ago.
Exactly. A year ago, rates were likely in a place where nobody wanted to touch their mortgage. Now, clearly, people are finding opportunities to save money.
And that brings us to the market share. This is the really interesting part. The refinance share of mortgage activity has ticked up again.
So, out of everyone applying for a loan, how many are just swapping out their old mortgage?
It's up to 59% of all applications.
59%? That feels pretty dominant.
It is. It's up from 58.2% the week before. And get this, that is the highest level we've seen since September.
Wow. So even though volume is down, refinancing is basically eating the market right now.
Exactly. It implies that the purchase market, people actually buying new homes, is shrinking a bit faster than the refi market.
Which makes sense. Who wants to move furniture in the middle of December? It's much easier to just sign some paperwork to lower your rate and stay put.
Spot on. So the takeaway. Demand is cooling for the holidays, but the refi market is still incredibly strong compared to last year.
We'll keep an eye on it to see if that trend holds into the new year. Thanks for listening, everyone.
Catch you next time.